Hi, it's Dwyer. It's November 20th, 2025. It's 2:07 p.m. Pacific time, right? So the stock market has closed for the day. Nothing I say in this video should be construed as investment advice. I want everyone to do their own due diligence. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, folks, I'm getting killed today, right, in the markets. I'll name two investments. Solana, it's down more than 1.5%. Not on the week, but on the day, right? Cardano, folks, it's down, as I make this video, more than 5%. Again, not on the week, but on the day, right? Many pundits will come online and they'll tell you about, the great days, the bull runs, right? I like to do the opposite. I like to come on here during down days and talk about the challenges, right? So let me just say, I'm extremely bullish on Solana. Their spot ETF just got approved, is on the market. It allows for staking, right? That's a step forward. Understand, Cardano, down more than 5%, well below 50 cents. Now, I'm extremely bullish. I want people to do their own research, look up the midnight protocol that's going to roll out. Just understand the macro trend that has buoyed cryptos like Zcash, of late Dash. There's an increased focus on privacy in digital asset transactions. Cardano is now moving in that direction, but they're offering a wrinkle where they'll allow you to be private up to the level of required legal disclosure, right? So they're trying to be regulatorily compliant, right? Something some coins aren't doing, right? With the idea that you can have as much privacy as legally allowed. They're down 5% today, right? On the day. I'm not selling either Solana or Cardano, right? In fact, I remain extremely bullish on both. Now, let's talk about a part of my macro. And as I've said in an earlier video here, people need macros. In other words, you need to think about different parts of the economy, and you need to ask yourself the question, how's this going to be in 4 months, 6 months? Is there an investment opportunity here? Now, folks, a lot of people are getting laid off, right? A lot. You're reading in the paper about thousands of people at some companies getting laid off, right? I've talked with some folks about the anxiety some workers have at companies where they work and have survived different rounds of layoffs. Right now, couple that with the fact that you have stocks very overvalued, according to the Buffett indicator, right? Extremely overvalued. And you understand the idea of margin trading, right? Where I borrow money to invest money. That works in a bull market, right? The investment then has a rate of return that's greater than the interest I'm paying on the margin debt. Folks, that's an absolute disaster in a bear market, right? And you understand, when the Buffett indicator is telling you that stocks are worth twice what they should be on average. Right? Then you realize that a bear market is a distinct possibility. Right? I want people to also listen to Harry Dent. I'm going to name some names here. In my opinion, just like you follow baseball stars or football stars, right? Just like I, look at Ohtani to see what he's doing, just like I look at Josh Allen or Pat Mahomes to see what he's doing, I believe a theme in the investment world has to be that you look at certain investors, right? Michael Burry recently exited the, his Scion Management hedge fund, right? You need to look at people who have observed the market for a long time, make data-backed arguments, have opinions, whether you agree with the opinion or not. For example, I'm extremely bullish on Bitcoin. Peter Schiff is not, right? I love following Peter Schiff. I know he's in the gold game, right? I like gold too. I know he's in the gold game. But I also know he feels that Bitcoin isn't like gold, that Bitcoin is a bubble. He has factually based arguments, right? He asked the question, what exactly is Bitcoin backed by? Right? He doesn't buy the argument that it's scarcity, right? Jim Chanos is interesting, the famed Enron short seller, right? He's against MicroStrategy, now Strategy, Michael Saylor's company, right? And he makes the argument, hey, why is Strategy priced above the net asset value of its Bitcoin holdings? Right? If you believe in something, you need to keep track of the arguments against what you believe in. Right? I love following Schiff, Jim Chanos. I'm going to encourage viewers here to follow Harry Dent. Harry Dent talks about market collapses. Right? He talks about in history how they typically proceed, how big the first step down is. Right? Folks, that first step down could be huge. So, I believe the credit market is going to face pressures. Right? Let's just keep this simple. I believe a lot of people, in the longer run, who've been laid off or who have been trading stock on margin are going to have to be customers in the debt market. They're going to have to get new debt to pay off old debt and living expenses. Now, the way things work is in the short run, you're working for a glamour company. They lay off 1,000 people for public relations reasons. They'll give out severance packages, right, for legal reasons too. They don't want to be sued. They'll give out severance packages. The severance packages at first will sound extremely generous. Let's say you have a 6-month severance package. The problem is you weren't the only person laid off. 1,000 people at your company were laid off. The further problem is that the reason why the jobs were lost is because technology has obviated them. So the competitors of your glam company are also laying off workers. They don't need as many code writers as they once did. Right? They don't need as many people in your position. So it's a big step down in your occupation's job listings. Right? We can have all these great ads on TV for companies like Indeed, right? Where the idea is, hey, this job's not a good fit. Let me use Indeed and let me get a bunch of job interviews. What if the job interviews aren't there? What if the competition for the few jobs that are there has been magnified. Now, unfortunately, right, the way the world really works is that you have that mortgage payment. That's a commitment. You have to put food on the table for your family. That's a commitment. Right? You understand that you have certain bills that you just can't walk away from. Let's say you're helping your parents make ends meet financially. They're depending on you. You're their hotshot son who has the job at the glamorous company. You're the hotshot son with that hotshot career. And no one around you understands the fragility of your situation. You've lost that job. You still have these expenses. They're not going away. Are you really going to talk to your wife about taking your daughter out of private school? Right? What are you going to do with the car note that you're paying? Right? Don't you need transportation to the job interviews? At least that's how you see it, assuming there are job interviews to be had. So I believe a lot of people, during an economic downturn, are going to need credit. Right? Now, folks, let me pivot here. Just imagine if you could peek over the shoulder of a billionaire. Just imagine if you could, without even talking to anybody, without paying anybody for the information, just imagine if you could actually find out what a billionaire is investing in, especially someone who's keeping track of the macro, is thinking about the markets that are going to be under pressure, where there's going to be a heightened demand for things like credit, and who, of course, is providing the supply. Folks, you actually have that in the United States. Whale investors who have public duties, right, to others, have to file what's called a 13F. Right? This is where they, list their recent buys and their recent sales. Right? Recent sells. Right? This is where they say, hey, this is what I'm interested in. And sometimes what they're interested in is surprising. Now, one of the great investors in history is Stanley Druckenmiller. Right? If he were an athlete, he would be Ohtani level. He would be Joker level. In other words, he would be right around the top of his profession, Yamamoto level. Right? The fact that he's not as popular as those athletes shows you how upside down the world is. Right? So just understand, Stanley Druckenmiller sees what's happening in the private credit market. He also sees what's happening in terms of the job losses, right? Job losses today become demands on credit tomorrow when there are job scarcity, right? In other words, if you're concerned about AI disintermediating workers, if you see workers being let go, if you know there's going to be increased demand in lending markets, and if you realize that AI in loan origination could be a boon, and that there are companies already using AI in loan origination who are doing well, but yet haven't caught the public's imagination. In other words, the people who know are the investment hardcore. We'll name some of them. right? The people who don't know are Jane and Joe Public. So, folks, Stanley Druckenmiller's recent 13F reveals that he has been buying stock in publicly traded, it's traded on the NASDAQ, FIGR Technology Solutions. The symbol is FIGR. Right? Again, the symbol is FIGR. Now, folks, I'm not making a stock recommendation here. I'm just telling you what I'm doing. Right today, in the middle of getting rained on, right? Having a stock down or a crypto down more than 5%, right? In the middle of this downdraft. At one point, I looked at my portfolio. I saw red all over the place. One of the few green spots was Exxon. And understand, let's just say the oil sector hasn't been thriving for several months now, right? It's like the market, what was going down is doing okay. What I believe in the most is under pressure, right, folks? Just understand today. I picked up some FIGR Technology Solutions. I believe legally I can tell you what I'm buying. Right? You have to think for yourself. Trust no one, including me. Now, folks, this is a speculative play. Right? Number one, it's been vetted by Stanley Druckenmiller. Right? He's buying it. Number two, the history is promising. First, let me just point out that the addressable market, the space in which they're operating, consumer lending, is a $2 trillion market space. In other words, the efficient provider in this space could make a mint. There's a long runway here. Right? Understand, too, that Bernstein, that's a market observer you need to know, has a target on the stock of $54, which is more than 30% above where the stock is right now. Just understand that FIGR Technology Solutions is blockchain based, the Providence blockchain platform. Right? Just recognize, in terms of efficiency, that just like AI has obviated the need for a lot of workers in things like code writing, I need for you to look at these banks and think about how bloated they are. Right? They're paying for real estate leases, for bank locations. When you're in a bank, you're looking around at the bankers, you're thinking, wow, these people must be making six figures and higher. Right? You understand that traditional banking is rife to be taken over by a more efficient modern model, one that uses artificial intelligence, one that uses algorithms, one that looks at your credit rating, looks at your income, looks at your loan request, and can, based on an algorithm, figure out the likelihood of you repaying the loan. Right? Think it through here. Right? This is the AI banker making loans using the blockchain. Now, the company was founded in 2018. I like that. So you can actually review a few years of performance. The market cap is only around $8 billion. Their IPO, and again, this is a speculation, this is far from a sure thing. This is a speculation. It's November of 2025. The IPO was 2 months ago. Right now, again, you know, you think about these investment opportunities that rich people get through word of mouth, right? What's the mythology? Some rich person is at a private club. They hear from another rich person about some, business with a big addressable market. Through word of mouth, the rich people have their own information. Nobody else does. Folks, this is in broad daylight. You yourself can Google Stanley Druckenmiller's 13F. You yourself can look up this publicly traded company. Now, let me just talk about performance in the third quarter of this year. And keep in mind, this is a speculation. Revenue jumped 55% year over year. Right, folks, the revenue is a little bit north of $150 million. So you're getting in early. Understand, this group, who most people watching this video probably have not heard about before. And again, on the NASDAQ, the symbol is FIGR. This group, of course, has partnerships with KKR. Look them up. Apollo. Look them up. Blackstone. Not BlackRock. Blackstone. Look them up. In other words, folks, this group's known. This group has known in the right circles, known with market participants. Right? Nassim Taleb talks about skin in the game. This group is known by people with skin in the game. Right? Just understand. They've tokenized $17 billion in private credit. So what you have here is a setup that's far more efficient than traditional banks. Right? It has access to a lot of capital at a time when unemployment is increasing. Stocks are overvalued. Credit is likely to dry up just at the moment when more people need credit. So on this rainy day, and I see the sun has broken through here, believe it or not, in Northern California, right? I'm buying this stock. You can pick it up on Robinhood. It's listed. Right? I'm buying this stock today. The stock's selling for around, we'll round up, $36 a share. By the way, this stock, the last time I looked just a few hours ago, was down on the day. Right? We're not following momentum here. We're looking at the addressable market. We're looking at the past profitability, the profitability trends. We're looking at their partnerships. We're looking at who is investing in the company. Right? So today, on a rainy day for me, I've invested in FIGR Technology Solutions. Right? I'm not selling Solana. Right, folks? Just understand. We had a government shutdown. That delayed things like SEC approval of the spot Solana ETF with staking. Right, that has just rolled out. Understand, crypto's in a bear market for the last few weeks. Bitcoin, of course, is below $100,000. My point to you is people are terrified right now. The crowd, of course, is on edge. Many people have sold cryptos. Solana, despite a spectacular performance in terms of the amount of transactions it handles daily and criteria like that, is down big over the last few weeks. I would argue that if you believe in the narrative that Solana grabs market share, that more people become aware of Solana, that its transaction speed is elite. You want to go toward that transaction, not away from it. Right? All I could say about Cardano, very cautious outfit. They overtest everything. Right? But if you believe that privacy is a trend that is going to be sustainable in the space, if you've looked at the prices of privacy coins like Monero, Pirate Chain, Horizon, Dash, we'll lump Dash in with the other privacy coins, even though with Dash, the privacy is optional and is less rigorous. Right? If you've noticed that in this down market, privacy coins seem to be doing better than Bitcoin, seem to be doing better than Ethereum, right? Then my point to you is, if you know what's coming with Cardano, right? The drop in price is a buying opportunity. I'm just speaking for myself. Again, I'm not making any recommendations for others, right? I want you to think for yourself. I want you to do your own homework. I want you to learn the names. I want you to look up Stanley Druckenmiller's 13F. Those are my thoughts. Let me hear yours in the comments section of this YouTube video. Thanks for stopping by.